Have you ever watched those stock charts zipping up and down and just wondered, how on earth do people make a living doing that? Buying and selling in minutes, sometimes even seconds. Well, that's the high-stakes world of day trading. And today, we're going to pull back the curtain and break down the core strategies, the actual thinking that separates the pros from the crowd. All right, let's get into it. But before we dive into the how, we have to talk about the how many. Out of all the people who try day trading, take a guess what percentage actually makes money consistently, like month in, month out. The answer, according to study after study, is that tiny number right there, somewhere between just 1 and 4%. Yeah, it's brutally difficult, which is exactly why you have to understand the logic we're about to cover. Okay, so first things first, let's make sure we're all speaking the same language. What is day trading? In theory, it's super simple. You buy something, a stock, whatever, and you sell it before the market closes that same day. That's it. You are flat at the end of the day, meaning you hold nothing overnight. The whole game is played between the opening and closing bells. So what's the secret sauce? The magic formula? Well, here's the thing. There isn't one. Instead, almost every single day trading strategy you'll ever see boils down to one of two fundamental and kind of completely opposite worldviews about how markets actually behave. And here they are, side by side. On the one hand, you've got your momentum traders. Their core belief is basically Newton's first law: an object in motion stays in motion. They see a stock moving hard in one direction, and their goal is to jump on that moving train. Then, you have the complete opposite, mean reversion traders. Their philosophy is simple: what goes up must come down. They see the market as a giant rubber band, and when it gets stretched too far in one direction, they're betting on the snapback. Let's dig into momentum a little deeper. See, this is not about buy low, sell high. No. This is about buy high and sell even higher. And why would that work? Well, think about it. Big trends are usually driven by something powerful, a huge earnings report, some game-changing news, or just a flood of big institutions all trying to buy the same thing at once. Momentum traders are just trying to surf that wave for as long as it lasts. Now, have you ever looked at a stock that's just shooting to the moon or cratering to the floor and thought to yourself, this is insane, there's no way this can last? If you have, you're thinking like a mean reversion trader. This strategy is really a bet against human emotion. It's a bet against the extreme greed and panic that makes prices overshoot their actual value. These traders are just patiently waiting for that overreaction to fizzle out. Okay, so these philosophies are cool, but how do they actually turn into a trade? Let's get practical. We're going to look at a classic momentum strategy that tons of traders use literally every single morning. You know, how the first 15 minutes of the stock market are just complete chaos. Well, a strategy called the opening range breakout, or ORB, is designed to bring some order to that madness. The idea is to let the early chaos play out, let the buyers and sellers establish a clear battleground, and then you place your bet on whoever wins that initial fight. So how does it work? It's actually a pretty elegant four-step process. First, you just watch. For the first, say, 15 minutes, you identify the highest price and the lowest price the stock hits. You draw a box around it. Step 2, you wait for the price to break out of that box, either above the high or below the low. Step 3, and this is super important, you look for a big surge in trading volume. That's your confirmation that the move is real. And finally, step 4, you jump in and place your trade in the direction of that breakout. All right, let's totally shift gears. We're going from a strategy that might play out over 30 minutes or an hour to one that can be over in the time it takes to blink. This is a whole different beast. Welcome to the world of scalping. This is not for the faint of heart, let me tell you. Think of it as momentum trading on hype drive. Scalpers aren't trying to catch the big move of the day. Nope. They're trying to grab tiny profits, pennies on a stock, by jumping in and out over and over and over again. We're talking hundreds of trades in a single day. So what kind of person does this? Well, you need a very specific mindset. The frequency is insane. 200 trades a day is another question. The duration? You could be in and out of a trade in 10 seconds. The goal is death by 1,000 paper cuts. You're just stacking up tiny little wins. This requires a level of focus that is just, off the charts. And here's the kicker. You have to have super low commissions, because if you're only making $5 on a trade, a $2 fee just destroyed your profit. Okay, so we've got these two totally opposite worlds, right? Momentum and mean reversion. They seem like they couldn't be more different. But what if I told you there's one single tool, one line on a chart, that traders from both camps use every single day as their guide? And listen, this isn't just some little tool that retail traders use. The biggest players in the game, the hedge funds, the mutual funds, the ones moving billions of dollars, they use this as their benchmark. It's how they know if they're getting a good price during the day. It's called VWAP. That stands for Volume Weighted Average Price. Now, you might be thinking, isn't that just an average? No, the key word here is volume. See, unlike a simple average, VWAP gives more weight to the prices where more trading happened. So it gives you a much truer picture of the stock's financial center of gravity for that day. So how does our momentum trader use this? For them, VWAP is a line in the sand. If the price is staying above the VWAP line, that confirms the uptrend is strong. Buyers are in control. If the price breaks above it with a ton of volume, that's their green light to jump in. And if they're in a trade and the price falls back below VWAP, that's their signal to get out because momentum is dead. So what about our mean reversion trader? Well, they look at the exact same line and think the complete opposite. To them, VWAP is a magnet. When the price gets stretched way above or way below it, they see a rubber band that's about to snap back. The VWAP line itself often becomes their entry point on a pullback or even their profit target for the trade. Two different traders, same tool, opposite conclusions. Alright, we've covered the core philosophies, we've looked at some specific strategies, and we've even talked about a key tool. But we still haven't really answered the big question, have we? What is it that truly separates that 1 to 4% from everybody else? So which one is it? What's the best strategy? Is it better to ride the wave with momentum or bet on the snapback with mean reversion? Which one is the system that's going to work? The truth, it doesn't really matter. You could have the most brilliant, back-tested, mathematically perfect strategy in the entire world, and without the right foundation, you are still going to fail. You're simply asking the wrong question. So what is the real secret? The real strategy? It's the boring stuff. It's the stuff nobody wants to talk about because it's not glamorous. It's having strict risk management on every single trade. It's executing your plan with relentless consistency. It's having the iron discipline to follow your rules when you're terrified or when you're feeling greedy. It's focusing on executing perfectly, not on how much money you made on any one trade. That's the whole game. Look, the actual mechanics of these strategies, they're not that complicated. You can learn them. The real question, the one that decides whether you end up in that tiny 1%, has nothing to do with the chart or the strategy. It has everything to do with you. Is your discipline strong enough to do the right thing over and over again when your own money is on the line? This image is for illustrative purposes only. To gain a deeper and more structured understanding, join my community where you will have access to comprehensive materials and detailed guidance.